As the globe grapples with continuous economic issues, the Federal Reserve's position and performance have come under criticism. This video dives into the history of the central bank, its influence on the economy, and a contentious argument over its future. Is it time for a change, or does the Federal Reserve still play an important role? At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. While you are already here, don't forget to hit the subscribe button and click on the bell icon to get notifications for our future videos. So, let's begin the video. The Federal Reserve, Fed, was established in 1913 as a central banking authority to manage the U.S. economy and prevent financial catastrophes. It was created in reaction to a series of banking panics, with the primary goals of ensuring monetary stability and acting as a lender of last resort. After a century, the institution is now seen with mistrust. Is the Fed's significance waning in the face of ongoing and widespread economic turbulence? Economic turbulence and the Fed's impact. The Great Recession and the COVID-19 epidemic are two recent examples of exceptional instability in the U.S. economy. Critics blame the Fed, claiming that its policies, such as low interest rates and monetary easing, have created economic instability and widened the wealth disparity. Proponents, on the other hand, argue that the central bank is still critical in guiding the country through turbulent financial waters, emphasizing its role in regulating inflation and fostering employment. Quantitative easing, blessing or curse? When a crisis arises, the Fed frequently employs quantitative easing, or QE. This unusual method involves acquiring bonds in order to inject capital into the economy. QE is intended to lower interest rates and stimulate lending, so encouraging economic development. However, detractors contend that it has created asset bubbles and worsened income inequality since rising asset prices reward the rich disproportionately. Furthermore, QE has increased the Fed's balance sheet, increasing concerns about the long-term repercussions and the possibility of further inflation. The latest rescues of Silvergate and Silicon Valley Bank have contributed $300 billion. The independence debate. The Fed's independence from political interference has two sides. On the one hand, it promotes unbiased decision-making by ensuring that monetary policy is influenced by economic rather than political issues. On the other hand, it raises questions about responsibility and clarity. Some urge for a more democratically responsible central bank or enhanced congressional monitoring, since unelected executives make choices that have a significant influence on the U.S. economy. Alternatives to the Federal Reserve. Alternatives would be required if the Federal Reserve were to be dismantled. Some advocate restoring the gold standard, which would bind the value of the U.S. dollar to a fixed amount of gold. This strategy may lower the danger of inflation while restricting the government's flexibility to respond to economic swings. Others call for rule-based strategies, such as the Taylor Rule, that use macroeconomic factors to influence interest rates. However, stringent adherence to such standards may decrease the flexibility required to deal with unexpected economic shocks. As an alternative to the conventional banking system, cryptocurrency-backed monetary systems have been proposed. Proponents say that decentralized currencies, like as Bitcoin, provide greater transparency and are less vulnerable to manipulation. However, skeptics refer to cryptocurrency's severe price volatility and environmental issues as important negatives. Lessons from abroad. International comparisons provide useful information. From the European Central Bank to the Bank of Japan, central banks throughout the world have received similar criticism. In Europe, the ECB's negative interest rates and quantitative easing policies have sparked debate, while the Bank of Japan's vigorous monetary easing has raised questions about long-term viability. Examining their accomplishments and failings might help determine if the Fed should be altered or replaced. Federal Reserve, the road ahead. The Federal Reserve issue is complicated and varied. Scrapping the organization would have serious consequences for the U.S. and global economies, perhaps leading to further financial instability. Reforms may provide a more realistic approach, but reaching agreement on the most beneficial reforms remains a difficult issue. Improving openness, strengthening democratic accountability, and using more focused policy instruments might all contribute to the Fed's improved performance and trust. Reforms. Implementing clear communication techniques to improve transparency and manage market expectations is one potential improvement. The Fed has already made measures in this direction, including as issuing forward guidance and conducting news conferences following policy meetings. However, more efforts to clarify policy objectives and decision-making procedures might boost public trust. Another reform option would be to reconsider the Federal Reserve's dual mandate of maximum employment and price stability. Reassessing existing goals and even adopting new ones, such as focusing on financial stability or decreasing income inequality, might better link the Fed's mission with current economic issues. Innovation. Furthermore, investigating novel policy instruments might be beneficial. Central banks throughout the world have experimented with novel policies such as negative interest rates and yield curve management. While these measures are not without debate, they show a willingness to experiment in the search of economic stability. The Fed might benefit by researching and implementing creative solutions that best suit the interests of the U.S. economy. Finally, assessing whether it is time to abolish the Federal Reserve involves comprehensive study, open discussion, and a willingness to experiment with other alternatives. The future of the United States and the global economy is dependent on striking a careful balance between stability and adaptation. To stay relevant, effective, and responsible in an increasingly linked and fast-changing world, the Federal Reserve's function must change. The problem is identifying the most prudent course of action. Inaction or poor judgments might have far-reaching effects for future generations. What do you think? Is it time for a change, or does the Federal Reserve still play an important role? Share your thoughts with us in the comment section below. Also, don't forget to share your feedback with us. See you in the next video. Until then, take care and keep investing in crypto.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.